Price. That's the number one technical indicator.
You do best by investing for the longer term.
If you can't explain what the business is doing, then that is a huge red flag.
Some technological change is going to put you out of business.
It really is a genuinely extraordinary situation.
Hey everyone, Ed Gotham here, and welcome to Opto Sessions, where we interview the top traders and investors from around the world, uncovering their secrets to success. We've got Howard Lindzon from Phoenix, Arizona on the show today. He's the founder and a managing partner at Social Leverage, an early stage seed investment fund whose standout investments include Robinhood, eToro, Kustomer, Rally Road, and a lot more. Many will also know him as the founder of StockTwits, the largest online community of investors and traders. Howard also has an incredible blog, and I highly recommend it. He is answering the questions everyone's asking about the market on a daily basis, and in truth, like his wisdom has helped me a lot over the years. In this interview, though, we dive into SPACs. What is a SPAC? Why are they interesting? Why do they exist? We also touch on some consumer trends, such as the highest savings rate in 50 years in America at the moment, and what this might mean for markets. Enjoy the show. Hey, Howard. How you doing? Thanks for having me on the show again.
No problem. How are you?
Pretty good, man. Pretty good. We've been in lockdown for quite some time now, so I'm sure, at least in England, everyone wants things to turn back to normal a little bit soon. Going a bit stir crazy. I don't know how you're doing. Are you in Phoenix at the moment?
I am in Phoenix at the moment. Yeah, life is a little bit opened up here for sure.
Yeah. I see you posting pictures. You go biking a lot and running and stuff. It looks quite a nice place to live.
Yeah, pretty good weather and everybody's out and about.
Yeah, fair. Something else I've been seeing actually at the moment is, because you're an investor in Rally Road, and over the last sort of couple of months or so, I've been seeing, it's baseball cards that I've been seeing everywhere, but it's been crazy how it's suddenly spreading, at least the people I follow on Twitter, the sort of FinTwit sort of network, it's been everywhere. How's that business going at the moment?
I think the business is developing. It took, maybe all this money is finding, and these young people with their phones and the free time is kind of dribbled into collectibles and, both the digital side with NFTs, but now even on the physical side with cards. They don't fully grasp the NFT side so much, but the business is growing really fast for Rally Road. They've built a good brand, people trust it, and pretty much anything they put out there is selling. Yeah.
And I'm right in saying they got hold of, is it the original Declaration of Independence? Is that right?
There's 20 of them, supposedly, and they did get hold of one. And it's going to, they say, price at around $2 million. Pretty cool.
Wow. That's pretty cool, yeah.
Yeah. Should be an interesting
and just, you've been on the podcast before, but could you give people a very quick 1 minute, like, who's Howard Lindzon, just so people know who you are?
Yeah, venture capitalist. For the last 15 years, we're investing out of our fourth fund we just raised. We write first checks into software companies, mostly U.S., financial services, enterprise, e-commerce, and then we also have our first SPAC, $340 million blank check company that will be looking for a merger acquisition with another fast-growing technology, most probably software company. And we're born in Toronto, live in Phoenix, and one wife, 2 kids, 1 dog.
And you're also, so you've invested in Robinhood and eToro and a number of big companies.
Yeah, sorry. Claim to fame is I started StockTwits. Before that, Wall Strip, which was acquired by CBS, and Seed Investor and Robinhood, eToro, Koifin, Rally Road, Alpaca, a lot of financial companies.
So come to fame in the last sort of 3-4 years, they've all sort of rocketed to big heights, haven't they? It's been a good few years for Howard.
Yeah, I think the lesson is you can't predict. Yeah, it's been a couple of good years. I'm not complaining. We're a little early. That's how tech can work, but everything seems to be coming into our sweet spot.
Yeah, definitely. And I suppose, yeah, it's interesting. You mentioned the SPAC you've just sort of launched. It'd be good to get, this show. I just wanted to ask you about SPACs a lot, basically, because I think they're misunderstood by quite a few people and big trend at the moment. And it'd be good to get your 2 cents on SPACs and what they are, basically, and what we should be looking for. What is a SPAC? Like, I mean, if we start there, like special purpose acquisition company, why do they exist as opposed to normal IPOs? And why has it been a big trend for investors?
Yeah, I think, again, I think it's a combination thing. We went through a long period without IPOs. We went through this long period where growth funds were the celebrities, and maybe they weren't doing as good a job with SoftBank. We saw with WeWork, and then we have this, this influencer model that is so popular amongst creators. Kind of filtered its way to finance. With Chamath creating this way to kind of raise money and be trusted more to find a growth company than some of the growth funds themselves. And it's an old idea, special purpose acquisition corporation, quite an elegant solution. And, just being utilized in a unique way by financiers right now. And then we just did one ourselves. So it's a trust thing. People trust us.
Yeah.
You have 2 years to find a target. The capital's put up generally by the group. We've put up the capital to get one done. So it's not like we're not taking risk. And, it's really the retail investors have taken a love to it because they feel like they get to be a part of the IPO process without paying a huge premium. So, and then you have the Fed printing money. So it's just this giant cocktail of events that just happen to bring back this feature, which is not a new idea. It's an old feature, but its time seems to have come.
And you touched on something there where you said it puts more power to entrepreneurs such as yourself rather than growth funds. Are you talking about like PE companies and stuff like this? Is that what you mean there, or?
No, I mean, it was the larger Sequoias and the SoftBanks, have access to institutional capital. And I think, there's something more elegant about a group of people that get together to do one deal. And that's what a SPAC is.
Okay. Yeah. That's a nice way of putting it. Yeah.
Yeah. When Sequoia or SoftBank goes to raise a fund, they're putting a team together for 12 years to do 20 deals. It's hard to keep a band together that long to focus on one thing.
Yeah.
And they weren't doing a great job, towards the end. A lot of sloppy deals. So the SPAC idea is like, listen, here's our pitch, here's our S1. We only have to do this once. And so the incentives are pretty well aligned.
Yeah. And so they have to buy a company, but only one company or multiple companies?
Yeah. I think they work best as don't complicate it.
Yeah.
I think it works best as kind of a single company deal.
Yeah.
But they can be done, over multiple companies as well.
Yeah.
But I think they work best, down the middle of the road, personally.
So when they list, have they already done that deal already? Do they even have a target, or because some of them seem to be quite far along, so others not so much?
It's like Fight Club. You're not supposed to have a target. You're not supposed to talk about it until you have the capital, until it's trading.
Yeah.
So for us, it's been about 2 weeks since we listed, and then we meet as a group and we're calling on companies and CEOs. But before that, no, you're supposed to have like a general idea, but not actually be talking to targets.
Yeah. And there's a time frame, I believe, is there 2 years you're meant to have done the deal by?
Yeah, you have 2 years. So the clock is ticking. It's kind of like an option trade. And people get behind you, because you have 2 years to kind of organize it and put it together.
And so, but the stock is live, right? It's fluctuating price. And so is that the price movements of that stock is purely based on news coming out about potential targets or people trusting the founders?
Yeah, all very speculative, somewhat silly in many ways, that people are betting that you can do 1 + 1 equals 5. And for years the idea is it should trade right around $10 a share until there's a deal announced. But yeah, people speculate. They want to be behind good sponsors. and can't control how people behave.
Yeah. And as far as I'm aware, it sort of skips the IPO process, which is one of the sort of benefits of it. Where do these companies exist though? Like the shell company that will acquire another company that is listed, is it already IPO somewhere? I don't understand.
Yeah, it's confusing because you're talking about something created out of thin air. So we create a public company basically out of thin air. We put together a team. We file an S1.
Yeah.
And the S1 is an idea and a team, and it's just a long form document that says, if this, then that. We're going to put together a capital. Here's our management team. We're going to go on a road show to raise a certain amount of capital.
Yeah.
And
got you.
And then we'll have 2 years to do this.
Yeah.
So they're all kind of filed along the same lines.
Yeah, got you. And if you don't hit your target in 2 years, funds are returned back to the shareholders. So that's why, an option sort of thing. Okay.
Yeah. The funds are held in trust, I think up to about $9.90 a share after fees. So if people hold it through, the investors that buy it at 10 probably have 10 cents of downside over 2 years. But again, we'll have to see how this plays out over 2 years. There might be weird things happen. GameStop's at $150.
Yeah.
But theoretically, if you hold it through the end, you have 10 cents of risk because the money's held in trust.
Okay. Yeah. And so can you take us through the purpose of your SPAC and what it's trying to do, who you're looking for to acquire into, companies? And that'd be good.
Yeah. I mean, like other people that have done this, we feel that there's just way more public companies potential out there than there are right now. The demand for great, unique growth companies like the Pelotons of the world. No one thought Peloton could be a $30 billion company, especially when it came public. So what makes a great company, public company, is a great founder.
Yeah.
Always. And a market that's bigger than most people think, whether it's through acquisition or through your core product and growth. So we have just as good an eye, we think, as the banks. We've invested in hundreds of startups. Just like Robinhood was much bigger than people think, and eToro, StockTwits. We've seen things grow despite negativity and great founders. So we think, we've already seen this. The hedge funds have given us, and investment funds have allocated $340 million for us to do the same thing. So I think, we're trying to spot shooting stars and founders that are misunderstood and markets that are miscalculated. And we've seen that in the era of the cloud. So, we've been trusted to do the same thing. Yeah.
So you've got $340 million at the moment to purchase one company. And then could you take us through pipe deals, which is another word that's been thrown around quite a lot. I think Chamath has been using it a lot. It gives you the ability to buy more expensive companies than the funds you've got, right? Or is that right?
I think it's just a different way to raise capital.
Okay.
Again, you wouldn't have this environment without the Fed and without technology. But for example, say the team that we are after wants to pick a specific investor for more money. So what's great about a pipe is social leverage theoretically is aiming for a $1 to $2 billion company to buy 10 or 15% or merge for 10 or 15% with our 300 million. But with a pipe, we could target a $10 billion company.
Yeah.
Because that company may just want the small dilution from our SPAC, but because of our access to bigger investors that can write bigger checks, can specifically pick one investor to do the pipe, whereas in an IPO, they can't do that.
Okay.
And so a pipe allows the founder or company to pick specific investors for specific needs.
Yeah.
And so we can introduce them to those investors. It's much different than a brokerage roadshow where the founder doesn't know who his investors are going to be, and they got to have the quiet period and yada, yada, yada. There's many ways for the founders through SPACs and pipes to work directly with their investors.
We hope you're enjoying the episode. For interviews like this every Thursday, subscribe wherever you get your podcasts. And while you're there, make sure you give us a star rating and leave guest suggestions along with any other feedback in the review section. Now, back to the show.
And so it's obvious the sort of benefits for the investors, founders, entrepreneurs, etc. Do you think this trend has some benefits for retail investors as well? Do they get early access to potentially companies that would have been private before and stuff like this?
Yeah, I mean, it depends how everybody behaves. I mean, on paper, this should be a benefit for retail investors long term and short term, but depending on how they pick companies and how they're priced, et cetera. And you still got to do the research. The retail investor can read the S1s. They can talk to management team. We're all on Twitter. They can kind of get a feel for who these people are. But, if you pay huge premiums in the public market, you're going to get hurt.
Yeah.
But if you can buy a SPAC at $10.20, pay a small premium, and you have a feel for how good the management team is and the sponsors, you might find a good deal. You also may find a good deal now, like for example in March post-merger, where everything's getting sold off, but you still have to do the work. And then either way, you're going to be paying less of a premium in general than an IPO, which is marked up and kind of created out of thin air by other people that generally you pay a higher price. For that risk, you're supposedly having a more organized institutional round put together. There's a lot of history there that will have to be questioned, and I don't think we have enough data yet. Everybody thinks that there's a lot of hot takes. SPACs are great, SPACs are bad.
Yeah.
It's just a divisor. It's just that number where you divide it's trying to give everybody the same price, but it doesn't mean anything because it's just a divisor that everybody did to divide your capital raised by shares to get everybody at the $10 price. But it all has different market caps depending on how much money was raised.
Yeah. Okay. And obviously, so you've just launched your SPAC, and you joked on your newsletter about saying that you'll always assume you'll catch the top of the market when stuff like this happens. And SPACs, a lot of SPACs have got hit hard over the last couple of weeks or so. And there's been a bit of euphoria in the market, you could say, in that sort of area. But what do you think is going to happen going forward? Do you think this will mature a little bit and people will take it a bit more seriously rather than wild speculation? Or what do you think is going to happen to SPACs?
Yeah, I think it still comes down. You gotta do great companies. Retail's not stupid. Short term, everybody gets. Behavior can be frothy or panic, and it's very hard to get it right. We saw an opening, and it's a really good point. If I can raise a SPAC, that must be the top. That's just a general attitude I have. Is that if I'm involved, and I think that's just part of my personality. Yeah. Is that it's sometimes surprising, to learn by doing and actually succeeding. I'm not, I didn't go to Harvard. I didn't work on Wall Street.
Yeah.
I don't have a typical finance background. I do have an MBA and went to business school, but not at a top school, let's say. So I generally look at things with a more of a cynical eye. But at the same time, we put together a great team. And, as I tell entrepreneurs, you can't wait until someone says green light or red light. You just have to run like hell. Good things, bad things can happen. You have to have good people around you. And you shouldn't try and time this. Meaning, I'm happy we didn't wait. Yeah. It seemed like a bubble 6 months ago when we had the idea, but we just said, blinders on, we're going to go as fast as we can, and what happens will happen. And sure, as soon as we get public, I assume things will go to shit. But it didn't mean we weren't going to try to do this.
Yeah.
And I think that a lot of entrepreneurs get sidetracked and thinking about, what if? Our job is to run through walls, or run through corridors while those corridors are in front of us. And walls get put up, bad things can happen, but you just don't know. So you have to act as if you can get this done. But if you wait for approval, you'll never get approval.
Yeah. And because I follow your newsletter quite closely, you've been talking about the suppliers coming for some time. Did we get the supply and that's why we hit a sort of short-term top potentially? Or
yeah. A couple things. Rates, they promised us rates would never rise until we were 90. We see that, that happens all the time. Like it just became a foregone conclusion that rates will never rise. And then you had supply as well. So it didn't help that rates kind of shot up here, even though they're still at a very low nominal number, percentage-wise, it's a huge shock to the system. People start worrying and changing their pricing models. That's why we saw tech sell off. But at the same time, it's just still interest rates are just so low. So on a relative thing, supply just keeps coming. And eventually the supply, if you don't have any extra shocks, eventually we just start choking on all this supply.
Yeah,
and I think combination of like a little rise in rates, a little flinch, people looked up and go, wait a minute, I'm paying 100 times sales for this? I don't even know. I just think it's all those things and then the supply on top of it. And you had a real puke last week. But if I were to take a step back and I have to do that, is there some giant macro thing change? No, the countries are still going to open up. The technologies, the vaccine are working and it's working its way through the system. I think rates, unless they continue higher here, are now being priced in at least. Now people are saying, oh, rates do go up. So that's a good sign, not because now models will factor in 2% 10-year treasuries, not 0%. So, models will change, banks adjust, financings adjust, supply will come down. And now we'll see, it'll take a little while to see how many good companies there are and what have you, but valuations still remain high. So, there's a big bet that rates won't continue higher. And, if rates ease a little bit, I think the markets may, resume their uptrend. But at the same time, supply just keeps coming, and that's always a wild card.
Yeah. How much do you think this, obviously this massive stimulus bill has just been signed off, so it's coming in the next 2 weeks or 1 week or something at the start? Is that going to influence equities quite a bit, do you think? And when that stops in the future, will that have any implications as well?
I'm not a macro person, so I just try and watch prices. I mean, there's just so many experts on both sides saying, the dollar is going to shit, and Bitcoin's going to infinity. I don't think it works that easily, right? The U.S. dollar's held up pretty well, all things considered, best house in the neighborhood. And I think people have been devastated and they need some help. And so, I don't think anybody knows for certain what will happen. I, for one, hope the money gets into the right hands.
Yeah. No, well.
So I'm pretty optimistic about it.
Because another thing that, again, from your newsletter was Michael Batnick's been talking about the savings rate. It's like a 50-year high or something crazy. 16% of annual income or something is being saved at the moment due to what's been happening.
Hard for me to believe. I'm seeing the same data. I hear from lenders, same thing. No one's borrowing. The numbers are the numbers. I mean, people have done, in Japan, what happened is no matter how much they printed and gave to the people, they kept saving.
Yeah.
Americans are generally spenders, so this has been a shock to people.
Yeah. Do you see that? So over the next 6 months, are you suddenly going to see retail?
We'll know more. Right now, people have done what they didn't expect here, which is to save money, pay down their debt. Yeah, it's not an American thing to do that. So it's just a one-off pandemic panic, and things will go back to normal. We just won't know. I don't think anything people are doing are speculating.
And conscious of time, but I've just last thing I wanted to ask you about was the great unbundling of indexes, which I know you've talked about a bit, but I think it's really relevant for our community is to describe your sort of thoughts on that, and how individual investors can improve their sort of strategies, basically.
Well, I think for a decade at least, this idea that you shouldn't pick stocks, you should index, and I think it's a great idea. Some people, if you don't have time to invest, you should focus on your business and on your personal life and your family. But it's such an amazing American freedom to be able to pick companies. And I think we went down this path where Americans were, indexing. And when you index, you end up with the same portfolio as your neighbor and your neighbor's neighbor. And I'm not saying that's bad, but it led to some very weird behavior in the markets. Where we all own the same portfolio. And when you all own the same portfolio, it leads to corporate behavior that people can get away with stuff like the banks. They were, if we look at any of the banks, they're just doing terrible behavior with setting up accounts. And we see at Wells Fargo where there's so much fraud and, basically racketeering by the CEO. And, you wouldn't get punished if you're a criminal organization and each week the S&P does their buying with the citizens' capital, and you're part of the S&P 500 and you get the capital inflow. Well, your stock is kind of buoyed regardless of your behavior. Or it takes much longer for that behavior to be punished because you have to just constantly be in the news, et cetera, et cetera.
Yeah.
So I think Americans have lost this muscle of investing post, the internet bubble and then the financial crisis that followed. People were just burned by owning housing stocks or technology stocks. But along comes the iPhone, and along comes Robinhood, and along comes Uber, and along comes all these great brands and kids and social networks. And kids are like, wait a minute, what the fuck do I own Exxon or Wells Fargo? I could own, Peloton and Lulu and Snapchat, and I don't even know what the S&P 500 is.
Yeah.
So I think we're seeing this unbundling where kids put a portfolio together of 15 companies or 10 companies, or they ask their friends, or they read some article, and they're just unbundling what happened before them. And so I think it's a good thing, but it'll lead to other problems. We've seen it with GameStop and see some bad behavior and weird behavior on its own. But I prefer that type of weird behavior than everybody vanilla and chocolate. I don't think investing is something where everybody should have the same product. And then we're all guaranteed 8%. And then who made up the indexes anyways, and why are those written in stone? So I think, investing is very much unique in a creative muscle. And I think it's good to see people flexing it. Yeah.
Awesome, Howard. Well, thanks very much for this quick interview today. And where can our community come get more insights from yourself?
Yeah, I'm easy to find, howardlindzon.com, Lindzon, or on Twitter at Howard Lindzon, or at StockTwits at Howard Lindzon. I write a free blog every morning on trends and investing, and like to goof off with the community on StockTwits and Twitter. So it's easy to find me. Don't be shy. Ask questions. Ask questions. Find your mentors. There's a lot of great mentors out there, and kind of that's what we believe.
Thanks, Howard. I highly recommend the newsletter, by the way. It's my favorite, I think, that I get, and it's daily insights on the stock market. But thanks again, Howard. Have a great day.
Thanks, Opto. Thanks, man. Cheers.
Thanks for listening, everyone. Just a quick note before we sign off. If you're looking for an easily digestible daily update on the markets, this might be of interest. Opto Updates is our short newsletter sent every day during the trading week, giving you a bulleted list of the top 7 stories from the global stock markets. We've done the hard work for you, highlighting relevant opportunities and trends, and in addition, we'll also keep you notified of any new products, stock reports, or webinars from the Opto world. If you're interested, sign up using the link in the show notes. And thanks also to Co-Fruition for consulting on and producing the show. Until next time.